Welcome back to Taxes Made Simple. I'm your host, Chris Benson, and today we're going to go over how to pay yourself as a single-member LLC. If you're someone who has recently started a business, then you're probably thinking about setting up a single-member LLC or a multi-member LLC if you're getting into a partnership with someone. But in today's video, we're going to discuss exactly how you should be paying yourself as a single-member LLC so you don't get yourself in trouble and so you're leveraging the tax law the way it's meant to be leveraged. Let's dive in. Now, the first thing we have to understand about the single-member LLC is its characteristics. If you're a single-member LLC owner, that means you have established a disregarded entity. A disregarded entity is no different than a sole proprietorship, which pretty much means you decided to start a business, but the only thing you've done is separate the liability from yourself. This means you're no longer associated with just your social security number. You now have an EIN number that you get to utilize. The EIN number is taken to a bank where you can open your business banking account. You can have a checking account, a savings account, and you can even establish a credit card if the bank allows it. Now, in order to understand how to pay yourself as a single-member LLC, I'm going to break it down very simply for you on a white piece of paper on my iPad. Let's jump right in. What I have here is how to pay yourself as a single-member LLC. I'm going to draw a line directly down the center of the page. I'll put the single-member LLC on the left-hand side and I'll put ourselves, us, on the right-hand side. We've completely separated ourselves from our business. Our business is sitting on the left and we're sitting on the right-hand side. That means the liability is no longer associated with us. If something happens and someone wants to sue us inside of our business, they can only sue to the extent of what's sitting inside this single-member LLC. Now, let's say we started an online candle business, and our candle business made $100,000 in the year 2021. If that money was accepted through our single-member LLC, we need to make sure it was accepted the right way. If you've established yourself as a single-member LLC, the government has given you a very important number called an EIN number. I view an EIN number like a social security number for your business, because that's truly how your business is identified. It's the number you present to the bank to open a business account, and it's the number you use when you want to grow business credit or apply for a loan. This number is extremely important, but it must be set up properly. That means you need to take it to a bank and establish your business bank account. Once the business bank account is established and we have our candle business, we can accept the $100,000 through the single-member LLC. The next question becomes, how do we pay ourselves? If we move money from the business account into our personal bank account without doing anything formal or running payroll through a company like ADP or Carlton Dennis and Associates, then we've taken what's called a distribution. A distribution simply means we've distributed money to ourselves. Let's say we distribute $20,000. Does the business receive a $20,000 deduction? No, it does not. The reason the business doesn't receive a deduction is because we aren't processing payroll and we aren't taxed as an S corporation. When you're a single-member LLC, you're considered a shareholder. As a shareholder, you can take income and pay employees. But while employee wages are deductible, payments to yourself are not. This is what hurts many single-member LLC owners. They grow their business, start paying themselves, and later realize they aren't getting deductions. Eventually, they ask their tax professional if anything could have been done to reduce taxes, and that's when they find out they should have switched to an S corporation. To switch from an LLC to an S corporation, you need to file two forms: Form 2553 and Form 8832. These forms allow the LLC to be taxed as an S corporation. One important thing to understand about S corporations is that they have rules. One of the biggest rules is that you must pay yourself reasonable compensation, which is a salary. You also must file your tax return by March 15th instead of April 15th. Reasonable compensation means paying yourself a wage similar to what someone else would earn doing the same work. Think about any job you've ever had. Your pay was based on what you did. As a business owner, you determine reasonable compensation based on net income, not gross income. If you gross $300,000 but have $200,000 in expenses, your net income is $100,000. You cannot pay yourself more than what the business actually made. From that $100,000 net income, you take reasonable compensation. In my office, we use a rule of thumb that you should not take less than 30% of net income as payroll. That would be a $30,000 salary. This is where tax savings come in. Payroll reduces self-employment tax. Instead of paying 15.3%, you only pay 7.65% in Social Security and Medicare taxes on your salary. The remaining $70,000 flows through to your personal tax return and qualifies for the QBI deduction. That's a 20% deduction, which equals $14,000. This leaves $56,000 taxable. In this scenario, you pay far less tax than you would as a single-member LLC paying self-employment tax on the full $100,000. As a single-member LLC, you'd owe $15,300 in self-employment tax alone. After federal and state taxes, total taxes could approach $40,000. With an S corporation, total taxes may be closer to $28,000. The savings come from reduced self-employment tax and the QBI deduction. Paying yourself as an S Corp owner is flexible. You can still take distributions, and you only need to run payroll once per year if you choose. This allows you to budget, plan, and avoid overpaying taxes before knowing your true net income. I'm going to keep hammering this point in future videos because knowing when to switch from an LLC to an S corporation is critical for building wealth strategically. If you liked this video, feel free to like, comment, and subscribe. I'll be covering LLCs, S corporations, C corporations, and rental real estate on this channel. I look forward to seeing you in the next video.